Hello and welcome to our new Wilkins Southworth video. I'm Chris Wilkins. At Wilkins Southworth, we always explore the problem to ensure that you get the most proactive and best tax advice.
Among the many peculiarities of the UK tax system, one stands out more than most: the tax year dates. It doesn't begin at the start of January or even April, but on the 6th of April. To those outside the industry, this seems inexplicable and out of sync, and surely something that should be corrected relatively quickly. Even seasoned finance professionals find this anomaly frustrating, especially when dealing with international partners who work to a more predictable calendar year. Will tradition give way to modernisation? At first glance, it may appear harmless, simply a harmless relic of history. But behind this odd date lies a tangle of administrative workloads, misaligned reporting cycles, and digital infrastructure costs. These are not minor inconveniences. These are real-world inefficiencies embedded in legacy systems, something we have covered recently with HMRC systems. As global tax systems modernise and financial digitisation accelerates, the question of whether the UK should realign its tax year is more than an academic curiosity. It speaks directly to business performance, public sector efficiency, and the UK's readiness for global integration. A legacy of Julius Caesar. To understand why the UK starts its tax year on the 6th of April, we must go back to ancient Rome and the calendar system that, over centuries, fell out of step with the solar year. The Julian calendar, introduced by Julius Caesar in 45 BC, miscalculated the length of the solar year by approximately 11 minutes. This small error compounded over centuries, eventually prompting Pope Gregory XIII to introduce the Gregorian calendar in 1582. While many European countries adopted it swiftly, Britain held back a little, nearly 200 years, 1752, to make the switch. At that time, the fiscal year began on the 25th of March, one of the traditional quarter days used for settling debts and contracts. When Britain adopted the Gregorian calendar in 1752, 11 days were lost to bring the country in line with Europe. To maintain the full tax year and preserve revenue, authorities extended the fiscal year by those 11 days, moving the start date to the 5th of April, still a day short. Then, in 1800, a year that was a leap year under the old calendar but not under the new, an additional adjustment was made, shifting the start of the tax year to the now familiar 6th of April. Administrative consequences. Although this calendar quirk is rooted in historical necessity, its continued use creates tangible problems for modern financial administration. International businesses must reconcile their UK reporting periods with the calendar year accounting used in most other jurisdictions. This mismatch complicates financial consolidations, particularly for multinational groups or firms reporting under international financial reporting standards. The unusual year start makes life difficult for payroll departments, facing unnecessary complexity with annual P60 reports, year-end bonus calculations, onboarding or offboarding staff near tax year-end / start dates. Furthermore, these irregularities ripple through accounting systems, which must be adapted specifically for the UK model, often increasing development and compliance costs. HMRC has to maintain bespoke systems to accommodate the current structure, resulting in ongoing operational inefficiencies. This is of growing concern as the government pushes towards full digital tax administration. Calls for reform. In 2021, the Office of Tax Simplification, OTS, reviewed whether moving the tax year end to the 31st of March or the 31st of December would benefit taxpayers and the government. Their conclusions were clear. While changing the year end would involve costs and transition effort, the long-term benefits were potentially significant. Aligning the tax year more closely with business cycles and international norms would increase efficiency, transparency, and consistency. Professional bodies such as the Institute of Fiscal Studies and the Chartered Institute of Taxation have broadly welcomed the discussion. Many in the business community, particularly those with overseas operations, have expressed similar sentiments. For these stakeholders, aligning with global norms is not simply about convenience, it's about competitiveness. Despite this, political appetite has remained limited. The Treasury has acknowledged the merits but raised concerns over the complexity and potential disruptions of such a change, especially given the priorities such as making tax digital and ongoing tax reform initiatives. Arguments for and against change. There is a compelling case to modernise the tax year. A shift to either the 31st of March or the 31st of December would align the UK with international standards, simplify accounting processes for global businesses, and reduce system complexities. Payroll software could be easily standardised and financial reporting better aligned with corporate fiscal calendars. Moreover, a calendar year approach could make budgeting more intuitive for both businesses and individuals. For taxpayers, understanding income and expense in line with the calendar year may reduce confusion and support better financial literacy. However, the counter-argument is grounded in practicality. Updating software systems across the public and private sectors would carry a considerable upfront cost. During the transition, there would be complications related to tax allowances, cut-off points, and prorated calculations. For instance, some taxpayers might temporarily fall into different bands or thresholds depending on the transition structure. There is also a psychological element because while unconventional, the 6th of April date is deeply embedded in the UK's fiscal system and has been so for centuries. Disruption could also outweigh the benefits, especially at a time when businesses face economic uncertainty and stretched administrative resources. What might a transition look like? Should reform be pursued, shifting the tax year to the 31st of March would be the most sensible approach. This would align with the government's fiscal year, preserving much of the current system while offering a cleaner reporting structure. Alternatively, moving to the 31st of December would require more complex transitional planning. This might involve a shortened tax year, clear guidance on allowances, and phased adjustments to ensure minimal disruption. In either case, communication and simplicity would be critical to long-term success. Summary. The UK's 6th of April tax year is a historical anomaly that continues to shape modern finance subtly but significantly. For some, it is a harmless quirk with no real impact, while for others it represents an unnecessary burden that complicates systems and undermines global alignment. As businesses digitise and borders blur, the pressure to modernise will likely grow. Yet the question remains, is tradition holding us back, or is it simply part of what makes our system work? That decision ultimately rests with policymakers, but every finance professional should be ready to join the conversation. If you're finding it difficult to manage complex regulatory obligations while maintaining budget control, speak to us today. We gladly review your situation and discuss how we might help. Simply go to our website, leave a message, and we'll get back to you as soon as possible. By the way, don't forget to subscribe to learn about other videos in this series.